Hey gang, I'm Dr. Who. This is Accounting is a Joke, where accounting makes sense so you can make dollars. Today we're going to take a look at a walkthrough exercise on how to properly create a trial balance. So if you're unfamiliar to what a trial balance actually is, don't fret gang, I dropped a link to a video that'll get you up to speed in no time. So with that being said, let's get it! So before we go into this trial balance gang, quickly, remember this one key point. The trial balance is only a self-check for the accountant. It never actually gets in the hands of the outside public, like the financial statements. So the reason that the trial balance is developed just to assure that the debits and credits are equal. It is not 100% foolproof. You could have a correct trial balance, but still mess up somewhere in the recording process. So keep that in mind as we go through this exercise. So, the accounts of Anderson Moving Company follow with their normal balances as of August 31st, 2020. Remember, gang, normal balances is just the side in which the particular account increases. The accounts are listed in no particular order. So let's take a look at the accounts. Obviously, we're going to have to make a trial balance. We see that. So let's look at these accounts. So we have a list of accounts here in the table, and we should, I think, go through each one of these accounts and notify what type of family that account belongs in, thus telling us which side does that account has a normal balance. Because in order to create a trial balance, it has to be placed on the normal balance side correctly from the ledger. But gang, I've developed a foolproof, easy way to properly record correctly and know which side of the account is the account's particular normal balance, the all clear system.
This is a very, very, very big deal.
The all clear system basically divides the accounts into two gains or categories, the all gain and the clear gain. All gain will consist of all asset withdrawal and expense accounts, withdrawal being dividends, and the clear gain will consist of all capital, liability, and revenue accounts, capital accounts being stockholders' equity. If the account is a part of the all gain, the normal balance will always be the debit. If the particular account is a part of the clear gain, the normal balance will always be the credit. So, let's rock and roll. Common stock. Common stock is a part of stockholders' equity. Since common stock is a part of stockholders' equity, it'll be in the clear gain. And we know the normal balance for the clear gain is on the credit side. Insurance expense. Obviously, it's an expense, and expenses are in the all gain, so the normal balance for this account would be on the debit side. Accounts payable. Accounts payable is a liability. Obviously, liabilities are in the clear gain. Therefore, the normal balance for accounts payable will be on the credit side. What about service revenue? Service revenue is also in the clear gain, which makes the normal balance on the credit side. Building. Building happens to be an asset. And since it's an asset, it's in the all gain, which means that the normal balance is going to be on the debit side. Advertising expense as well as salaries expense both belong in the all gain, which make both of those particular account balances sit on the debit side for its normal balance. Cash is also an asset, which means that it's going to have a normal balance of a debit. Trucks is an asset as well, belongs in the all gain, normal balance will be a debit. Fuel expense, also in the all gain, normal balance is a debit. Dividends. Dividends, and other lack of better words of explanation, is just a formal way for a company to withdraw funds or income and give it to the owners. Since we're dealing with corporations, the owners happen to be shareholders. So dividends is just also known as withdrawals. Therefore, they're in the all gain, which will constitute a debit normal balance. As we already know, expenses has a debit normal balance. Accounts receivables happens to be assets, debit normal balance. Notes payable, last name payable. Any account has the last name of a payable will always be a liability who happens to belong in a clear gain. Therefore, it's going to have a credit balance. And last but not least, office supplies, which is considered an asset. Therefore, will have a debit balance for a normal balance. So now that we've got that part out, we could just create this particular account. Now, in creating a trial balance, we have a particular order in which we list the accounts. and it's the accounting equation. So we're going to start with our asset accounts first, followed by our liability accounts, followed by our stockholders' equity accounts, and the accounts that affect stockholders' equity. Remember, gang, stockholders' equity is broken down into two parts: paid-in capital, which deals with issuing stock, and retained earnings, which happens to be an account itself. Those are the only accounts that are affected. However, we know there are other particular accounts outside of stockholders' equity that affects retained earnings: revenues, expenses, and dividends. So let's rock and roll. We're gonna always start with cash, because cash is king, and we have a $4,000 debit balance for cash. Then we're gonna go to our accounts receivable, which happens to have a $10,000 debit balance. Then we're gonna go to our office supplies, which happens to have a debit balance of $100. Then we're gonna go to our building, which also has a debit balance of $4,100, followed by trucks, which also has a debit balance of $123,000. That looks like that's all of our assets. So now we're going to go to our liabilities, and our first liability will be accounts payable, which has a credit balance of $4,000. Then we're going to go to our notes payable, which also has a credit balance of $56,000. That's all of our liabilities now, gang. So then we're going to go to our stockholders' equity, and the first part of stockholders' equity happens to be paid-in capital, which consists of issuing common stock. So we're going to report our common stock amount of $49,800 on the credit side, followed by our dividends account, because we don't have any retained earnings, which tells us, gang, that this company just started. That's why there isn't a retained earnings account. And so our dividends in the all gang, so therefore it's going to have a debit balance of $5,600. We then list our revenues. We had a service revenue with a credit balance of $82,000. And then we're going to list all of our expenses, gang. And we can list them in order. How about we do that? List them in sequential order of the numeric value. So we have salary expense, debit balance. All of these are going to have a debit balance gain of $6,000. We have fuel expense of $1,000. We have insurance expense of $600, utilities expense $300, and advertising expense of $200. So now that we reported all of the particular ending balances in the proper normal balance position, we need to sum up our debit side and our credit side to verify the trial balance's true purpose. So if we add up all the debit sides, we should get $191,800. And if we add up all of the credit side, we should get the same amount of $191,800. Check our answer. Bags on deck. So there you have it, gang. A quick, easy illustration of how to properly create a trial balance. So if that light bulb clicking, now you further closer to chasing that bag with accounting, please like, subscribe, and share the channel with your friends so they can chase the bag as well. As always, I'm Dr. Who, and it's my humble pleasure for you to share your time with me on this channel. See you soon. Bags!